Traders, ladies and gentlemen, really excited about today actually, something completely different. I'm sure you're scratching your head thinking, Institutional Sundays is finally here, gonna be dropping edition 1, so definitely a must watch today. Kind of been on my mind for ages actually, for many months I've been wanting to do Institutional Sundays, something completely different, never quite got around to it. For many reasons. One of those, as you know, I had a lot of donuts to deal with basically, and I didn't think that people were ready for it, right? I mean, they couldn't handle audited returns, so how are they going to handle institutional information that takes things to another level, right? It might be information overload. But now that all that junk's been dealt with, as you guys know, now's the right time to launch Institutional Sundays. So look, as with everything, I do something different. I hinted there about the audited returns. I think that's why it caused such a stir, right? The fact that I was able to generate returns that no one could really challenge. It was so groundbreaking because no one's done it before. But obviously people kind of just couldn't handle it and had to kind of just make up rubbish, right? So point being, that was groundbreaking. I've now decided, right, how can I change up the landscape? You know, I realized every week I was talking about kind of my earnings in the S&P, and it was nice, and I'll continue to do that, right? Nice for people to see, obviously, you know, real feels and how I trade the markets and exactly where I got in and got out and all verified stuff and all that stuff. And that will continue, and I'll continue to show you exactly what I'm doing. But Institutional Sundays is about changing the landscape completely, because I feel like kind of when I look on YouTube and I watch videos, and I'm not gonna, you know, again, I'm not here to criticize any individual educators. I'm really not. Even though I talk about the industry in general, I really couldn't care less about individual people. You know, I wish everyone the best, and they can say what they want. But let's be honest, in general, it's utter garbage, right? There's so much bullshit out there. It's unbelievable. Honestly, I've struggled to like even keep my attention to it for more than 10 seconds. Every single video I see, and some of these guys have like hundreds of thousands of people following them, it's completely crazy. It's the same shit, let's be honest. You know, it's either about driving fast cars, or it's about why the market bounced off these stupid random lines that mean nothing. And that's where I realized, you know what, this is a golden opportunity. And I'm talking a lot, future Institutional Sundays, we're going to get straight into it. And I've purposefully started with this screen here so you can see. It's exciting. We got new stuff you've never seen before. Definitely this is going to be an institutional perspective today. Stuff I've never really talked about before to the community, even my own students. So there is stuff that we're going to get into in a second. The only reason I'm going on a little bit at the start is because it's the first Institutional Sunday, and I kind of want to give you the reason why I'm doing it, right? And so to come back to the point, every single video I see, I mean, Jesus, come on, give me a break. It's like I said, either it's about motivation and fast cars and completely irrelevant crap, okay? That does not motivate someone who wants to be successful at trading. I've never been motivated by fast cars. I may have a fast car, I may not. I'm not willing to reveal that just yet. Because it's irrelevant, okay? That's not why I got into trading. I got into trading because it fascinates me. And that's why I'm coming at you with education and knowledge rather than random stuff. And then the other thing I mentioned was all those ridiculous lines that every single video says, use this indicator, use that. This is why the market went up. This is why the market went down, because of this line that my grandmother could draw, okay? It's completely bullshit. That is not why the market goes up and down. And that's why, as I was alluding to earlier, I've started Institutional Sundays, because it's about time someone actually talked about why the market actually goes up and down, I've already talked about order flow, and that's very short term. But the reality is, even I accept over kind of time, the reason markets go up and down is order flow, but it's also, there's reasons behind the order flow that are off the charts. You won't see it on the chart. And that's fundamentals, right? They might not be so important day to day, but over the kind of medium term horizon to and onwards, very, very important. Okay. I don't necessarily use them to trade every day, but I think it's really important, and it kind of keeps your brain challenged, and that's why I gave the speech about the whole reason that I'm starting institutional Sundays, because there's so much bullshit out there. Think about it. What are you telling me? Watching someone drive around in a sports car is really going to improve your propensity or ability to learn something as complicated the markets? No. Is watching some guy from his bedroom or wherever he is, who's never actually worked in a professional environment or understands what drives some of the biggest investors in the world, we're talking hedge funds, central banks, investment banks, is someone like that who's telling you that the market's going to jump around based on some random crap, let's be honest, really, you watching that, is that really going to push you towards becoming a consistent trader or becoming skilled at something as complicated as markets? No. Okay. Whether you use fundamentals or not, and I don't really use them day to day, but what I find is by thinking about them, it really challenges me to question everything. Okay. Keeps me sharp, and also I think it's bloody interesting as well, right? I think it's important that you know what's going on in the world. And I never planned to give that speech, that 5-10 minute speech that I've just given, but I'm glad I gave it, because now you know why I've started institutional Sundays. I'm going to try to do it every week. Obviously, we'll see how it goes. This is the first one. Now I've given you the reasons why I'm even launching this. Let me stop boring everyone and actually get into it. Right, so I've got a great first edition today. We're going to be talking about kind of the format, the idea I've got for institutional Sundays. And obviously why I said all the stuff I said at the start is because I'm not going to be doing and talking about all the things that I've typically talk about in YouTube videos, which is kind of my results and why I got into trades and all of that. I'm taking a big step back, and I'm going to talk about the market in general, what's been driving the market in the last week. Okay, so the week in review. We're going to talk about last week. You can see the S&P here. It doesn't matter, okay, what you're trading. I don't care if you're trading pig's ears, okay, or if you're trading currencies, or if you're trading the S&P. The S&P and the US economy is the #1 driver of everything, okay? I find it too complicated to follow 15 different economies and 15 different markets, okay? The reality is, the way that globalization has evolved and the way the market works, basically, everything is interconnected now. You need to know what's going on. If you're going to follow something in terms of economics or fundamentals, it really should be the US. Kind of is the major driver of everything. There's that saying, when the United States sneezes, everyone catches a cold, right? I always used to hear that being said many years ago, and it's so true. The reason I'm saying all of this is because my focus is going to be on the S&P for institutional Sundays going forward. That doesn't mean it's irrelevant for anything else. In fact, it's highly relevant for FX, for commodities, even crypto. Okay, all the things I'm going to be talking about. I'm going to be talking about the economic calendar, things that are kind of in investors' minds at the moment, things that maybe aren't. The FOMC, the Fed, what they're doing, those kind of things. They're driving every single market, okay? You cannot participate in markets if you want to take longer term positioning without knowing this stuff, okay? And like I said, anyway, the point for me doing this is not necessarily to use it in my day-to-day trading. It's more so I can keep my brain sharp, okay? Especially outside of trading. I only trade about a couple of hours a day, as most people know. I've decided, you know what, I'm going to set myself this challenge of getting back into the sort of stuff I used to look at. When I was working at Barclays Investment Bank for many years, the stuff you're going to see in this Institutional Sunday is the sort of stuff I used to talk to my clients about all the time, right? Big hedge funds, central banks, real money funds, asset managers. The stuff I'm going to talk about here, this is what they cared about. They were slightly longer term. So it took me a few editions just to get sharp again, but I'm really excited about getting back into it. And yeah, let's see where it goes anyway. So enough of the introduction. I appreciate you hung around for that. Kind of just gives you an idea of why I started this. Next time we're going to get straight into it. So today, let's just go with it and see where it takes us. I want to look at the week just gone, right? So today is the 20. I say Institutional Sunday, okay? It got late yesterday. It's Monday today, but that's okay. Okay, typically I'll be doing this on a Sunday, but it's the week of 26th of July. So you can see here, this is the S&P last week. Don't know if you remember, guys, on Monday, and we're going to cover the economic data that potentially did or did not drive the S&P and all markets. Okay, if you remember, the S&P sold off on Monday. Here you can see down around just over 1.5%. What happened to crude oil last Monday? Completely collapsed. Okay, what happened to treasury yields? Right, completely collapsed. Right, treasury prices shot up. Do you see what I mean? Doesn't matter if I'm talking about the S&P every week or whether I'm talking about Timbuktu, who cares, right? They're all interconnected. You need to know this stuff if you're going to take a longer term picture, and for the reasons I said before. So Monday was really only the down day, the negative day. Tuesday, Wednesday, Thursday, Friday, all positive days, right? Obviously there was a lot of panic on Monday. I think people just were looking for an excuse as to why the market sold off on this particular day, down just over 1.5%, like I said. I've got a little note here just to remind myself of the data last week. So Tuesday, Wednesday, we didn't really have that much. We did have building permits and housing starts on, in fact, on the Tuesday. So we had some housing data, okay, on Tuesday. On Wednesday, we had crude inventories, but nothing that's really going to drive the market as a whole. It's very specific to crude oil, so I would say nothing on this day. And then coming into the end of the week, we had jobless claims, which was interesting. Really the only negative, I would say, from last week, from what I was reading. And then we had the manufacturing and services PMIs, which I'm going to talk a little bit about, but they've just been consistently above 50, right? Indicating expansion. So the market's really just kind of got used to where they are. So I don't think they're as important as they used to be. You know, before when they were below 50, obviously people were looking at them a lot to gauge around the COVID time, when was the market going to turn around? Right now they are comfortably above expansion territory. So we'll talk about them, but that's pretty much the whole week, right? Now, before we get into the economic data, one thing I wanted to mention, let me just clear that again. Okay, so on Monday was the only negative day we had in the S&P last week, right? And I read about this Delta variant being the reason, okay? Why, and panic, and oh my god, the world's going to end, you know, the Delta variant is now the new kind of, the rise of COVID has started all over again. And let's be honest, what a complete load of rubbish. The reality is, look at where the S&P is, okay? We're going to have a look in a second. We were just coming off the back of all-time highs. The market stretched. People need to take profit, okay? So people were looking at the Delta variant, but I think personally it was just all made up. Because let's think about this logically, right? And I think everything has to be backed up. If you have a thesis, I have a thesis that the reasoning that was given, the Delta variant, I think it was a load of rubbish. Why? Because what happened on Tuesday? The market basically retraced all the losses, right? If we come into Tuesday, the market retraced all the losses. What happened? Did the Delta variant just suddenly disappear? No, it didn't, right? And my memory is not great, but I read a little bit about the Delta variant, and I think, some people said that I think the number of daily cases in the US went from around 14,000 to recently it spiked to around 50,000 a day, and probably around 70-80% of that is the new Delta variant. But I also heard that even though vaccinations are around 50% of the population, so not very high in the US, right? In the UK, I think it's higher, and obviously some countries are more aggressive. I think the rate of people being vaccinated in the UK has slowed down quite a lot. Where's my train of thought? So what I was saying is it's around 50%, but actually the highest kind of risk ages are over 65s, right? In terms of not only catching COVID, but the death rate. And actually, around 80%, I think it's more like 85%, okay, of people over 65 have been fully vaccinated. So you've got a question, actually, is the Delta variant, is it justified that could be the reason why the market sold off, given, that its effect in terms of the death rate is going to be minimal, right? Most people who are actually at risk over 65, they're already vaccinated. So again, to me, I feel like it was just the newspapers clutching, and then people also like catching on the back of that, right? So, there's this theory that institutions are spread these false rumors so that they can get back into the market when we get a retrace. And I've worked in institutions. Let me tell you, a complete load of rubbish, okay? It's just the market is looking for something. And I think what it is historically 1.5, 2% down day would have been a big day. But I think people are not recognizing the environment we're in right now. 2021, okay, this is normal. Look at the next day, up the same amount, okay, up and down, same amount, big V-shaped recovery. It's very normal. So I think people just aren't used to it. That's what it is, and they panic and they're looking for any reason why we would have had a big sell-off. I believe it was just a correction, okay? So I've talked about the Delta variant and why I think it was a load of rubbish. One other thing I want to talk about before we get into this big rally, right? And another point I forgot to mention was, don't forget, I think we've just come off, I think it's about 12 days of consistent gains. So again, Monday was a little bit of a shock to the system, but I want to actually show you another graph that I've found. So this, okay, if you look, this is the S&P 500 corrections, okay, off the all-time highs. So every time it's got to the all-time highs, what's the corrections been like? And you can see last week here, remember we said, I think it's about 1.5%, okay, 1.5 or 2% or whatever it was. So you can see that there, that's right there at the edge. Can you see? You've got to put things in context. That's my point, okay? People talk about 10% being corrective territory, right? Come on, guys, where were we? We're there, okay? We're miles away from any type of even correction, let alone a bear market, okay? We're very much in bullish territory. I would say what happened last Monday, even though I heard so many stories and people going on and on about, oh my God, this is, big crashes coming because of this Delta variant, or we're going to have a massive correction, right? I've lost for words, really. I don't know where people get this stuff from. This is why it's important sometimes to put things into perspective, okay? So hopefully this is helpful for you to actually see that, for us to really be in a correction, I would say you'd probably be looking at something like 10%. We haven't even had a 5% correction this entire year. I believe we're up 17-18%. I think it's written on the other chart, isn't it? 17.5% year to date. So, basically we're very much in bullish territory. And let's have a look at the rest of the week, and then we can wrap up. So Tuesday, Wednesday, Thursday, Friday, obviously the market rallied, right? So why do we think that was? Well, part of it is obviously people feel in general that there's opportunity to make money in not only global stocks but assets in general, right? So people are feeling, in risk-taking mood, and therefore it only takes shallow corrections for people to find things cheap. But for those that do look at fundamental reasons as to, is it a good buying opportunity? It's there's a lot of interlinking going on, okay? Obviously, they're thinking about what the Fed is doing, and we can talk about that in future institutional Sundays. What's driving kind of the decision making of the Fed? What's causing the Fed to keep loose policy? That's where economic data is important, because obviously the Fed will not be looking at one kind of indicator. I hate that word because I don't mean retail indicator, okay? I mean economic indicator. They'll be looking at a whole host of things, right? So every week, obviously, there's going to be different focuses, okay? Some weeks it's going to be, GDP as a whole. Some weeks it's going to be imports and exports. Some weeks it's going to be manufacturing. Some weeks it's going to be services. Some weeks it's going to be housing. I think I mentioned the labor market as well. In this particular week, housing. There was a lot of housing data, and on Tuesday in particular, we did get some strong housing data. Okay, so in terms of the building permits, so in future institutional Sundays, maybe I'll go into a little bit about one or two pieces of data in depth, but I'm just going to give you a rough overview. Okay, again, like I said, I used to talk a lot to some of my institutional clients about this when I was at Barclays in the investment bank. So obviously my explanation skills are a little bit rusty because it was many years ago, but it's still there. Okay, building permits are obviously very important. It's almost like the first part of the process when builders are going to be building houses. They're going to apply for a permit, right? If you don't have a permit, you can't build. So obviously it's one of the most important kind of indicators of whether there's appetite to build, right? And that's a great leading indicator of which way the economy is heading, because obviously if the economy is doing well, home builders are going to be feeling very aggressive about building homes, because they'll feel that people are going to buy them, right? If the economy is doing well, there's jobs, people are going to be willing to buy homes, they'll be willing to build. Okay, so you can see how all of this stuff is very interlinked, right? So even though we were actually below forecast, right, we came in at 1.6 million, and housing starts, right, as well, which is obviously how many buildings are actually in the process of actually starting being developed, or houses are being started to be developed. That was above expectations at 1.64 million. The point is this, okay, and I'm only going to mention this once because I don't want to take too long now. I want to wrap up the video shortly. Is even though you've got to remember, okay, people focus too much on is it above or below forecast, right? Just because it was 1.6 and the forecast was 1.69, it's not negative, okay? It's actually very positive, right? You've got to look at where building permits are. So I think I put it up in the next slide. Let me show you what I mean by that. One of the reasons why the market took this positively, is my point, is you've got to look at, and I don't like this word trend, but it is, right? You've got to look at the trend, okay? Over the last 10 years in building permits, really it was around COVID times that we had this little dip down. But generally, if you look at where we are relative to history, right? 1.6 million permits in this particular month, the latest month's data, is very healthy, right? It's extremely healthy, and clearly the market feels that way. So that's why one of the potential reasons I said before, obviously the retracement of 1.5% was enough to get people interested in buying equities again, but also, clearly this helped, okay? A strong number in terms of building permits, There's clearly appetite to build homes out there, which is a good sign. Housing starts are very positive. I think the picture is strong, okay? It's solid. There is obviously supply constraints. I'm going to talk about that in a second, because we did actually have this housing market index, and I believe when you broke it down, some of the prices were quite elevated. And if you live in the US, you've probably noticed, right? Housing prices have just gone completely crazy, and a lot of that is supply constraints. So obviously it's interesting to keep an eye on that over the next few weeks and months and see if that can ease somewhat, and if the demand can continue to be met. But point is, this is a good sign, right? Because builders want to build, and therefore that should help that supply constraint and help some of those prices come down a little bit, which can obviously feed into kind of the headline inflation numbers and so on and so forth. I don't want to throw too much information at you right now, but you can see why everything is even interlinked, right? The inflation picture, kind of demand, supply, and even just how much you can gauge out of kind of one sector of the economy, and just even one or two numbers. But most importantly, as I said, is the trend. It's still very elevated relative to history. So strong housing numbers, let's be honest. And the market liked it, right? You saw Tuesday, Wednesday, it kind of was really feeling positive about those releases. And I mentioned Wednesday because, sorry, let's go back to, I just jumped forward to the following week. I mentioned Wednesday because on Wednesday, there wasn't much, right? So the market was really still digesting the previous days because it didn't have anything new on Wednesday. And that's why I talked about this quite a lot. It was quite important. Thursday was interesting, okay? And we had existing home sales, again, very strong, 5.86, pretty much around forecast. Unemployment claims, okay? This is the one probably only negative of last week. Claims, obviously people claiming, and over here in the UK we call it job seekers or whatever. Obviously out in the US it's unemployment claims, very high, 419,000. And I think the labour market is one of the most interesting things at the moment, and clearly something that concerns the Federal Reserve and the FOMC, who obviously set interest rates and policy and all of that stuff. So labour market, and the reason I say that is because if you look at the kind of unemployment rate which shot up during COVID, it's now come down. I believe it's 5 or 6%. I've forgotten the exact number, but it started to taper off a little bit. So it's really, it's kind of slowed down the improvement in the jobs market in the US. So that's kind of one negative. And I think a lot of people are looking at this number heading into kind of payrolls, which is coming up in, I believe, a couple of weeks. So I guess it was a little bit disappointing. Having said that, the market still went up, okay? And I believe one of the biggest reasons for that, right, is because there was also, and I forgot to mention this, and I'm glad I had this little prompt here, is earnings. Okay, and I think I did actually write this down just above here. So earnings, right? Obviously, we're in earnings season at the moment. People reporting on quarter 2 earnings. I believe 100 out of the 500 companies in the S&P 500 have already reported, and I think revenues have beaten estimates by around 80%. It's incredible. Okay, and earnings about the same amount as well. So basically, earnings reports from companies are incredibly strong. Okay, and that's another reason I think we had this bullish tone last week. If you remember, let's just go back to that chart. Okay, why you had such a push up, despite obviously the jobs number on this particular day. You can see, right, we had quite a rampant week, 1.5, almost 1%. Thursday, not as much. So obviously that kind of claims number did keep things in check. And then Friday, obviously we gapped up. But, it was earnings throughout the week that were obviously supporting the market, smashing estimates. You don't really need me to tell you why it's important that companies are earning money, because then they can afford to hire people. Obviously, they can invest right? They can invest in expansion, and obviously that creates more jobs, and obviously all of that is very, very positive for the economy. So yeah, very, very good news coming out of companies for Q2 at the moment. And also I read somewhere that earnings expectations, okay, earnings expectations, okay, going forward, which typically companies are quite clever, what they'll do around the middle of the year is they'll reduce earnings expectations so that when the actual earnings come out in Q3, Q4, the benchmark is lower, right? So if the benchmark, the expectation is down here and the actual comes in out here, right? It obviously is a positive surprise, right? So you can see why they're incentivized to do that. They would like to reduce some of those expectations that analysts at investment banks have. Actually, this time they've increased them, okay, which is just brilliant. It just goes to show the strength of company balance sheets at the moment. So that was obviously there. And then just finally, I'm going to skim over this very quickly because, like I said, we had the PMIs, which is a survey sent out to manufacturers and the service industry about their feeling about whether they think things are obviously bullish or kind of contractionary below 50, and very, very positive, right? Elevated levels, 60. I remember when, when things get bad, obviously well below 50, now well above 60. What can you say? It's consistently been around that. I'll talk about those in the future. It's already a long video, but essentially we ended the week very strongly. So hopefully, guys, that's useful and kind of really paints the picture of what happened the week before. Let's now talk about the week ahead. Just very, very briefly, I did make some notes here, but very poor notes actually. I wish I hadn't bothered because probably would have been better off talking off the top of my head because I can't even read my own writing there. But anyway, look, let's just get into it. Monday, and actually today's Monday, I've actually already traded today, right? And if you follow me on Instagram at NVForex, or you're in the G7FX community, you would have seen my fills. It's about $1,000 today. I'll actually show you my fills in a second. And it's important because new home sales, I believe, came in well under forecast. Let me just have a look here. Yeah, 676. Okay. And that actually was quite low, actually. That was a really disappointing number in terms of new home sales. 676,000. So that'll be interesting. I'm going to have a little read about that. But the market still went up today, right? So, one of the things people used to say to me a lot when I was in investment banking is they used to say, hey, it's not only the number that counts, it's also how the market reacts to the number, right? And if you have a negative number, that is a negative number, okay? We were hitting 1 million plus, 800, 900,000, 1 million plus for most of post-COVID. This is the lowest, 676,000, lowest level since April, right? Last year, new home sales. Okay, now there might be other extenuating circumstances for that, obviously with supply constraints and so on and so forth. I'll have to have a look at that. But let's be honest, that is a very poor number. So my point is, people used to say to me, hey, it's how the market reacts. And I never used to understand that when I was a young guy just starting in banking. And then it's basically this. What's the market done today? It's made new highs. We're going to have a look in a second. And we had a derisory number. Can you see the market's kind of shrugging this off? What the market is telling us is it's not focusing on that this week. What the market is focusing on is the FOMC. Okay, this week we'll have a chat about that. Any clues about any tapering in terms of their, buying of mortgage securities and treasury securities? Is there any, like the loose policy that they have? Could call it printing money or whatever you want to call it, but ultimately, obviously, the mechanism they do that by is they buy. I think it's around 80 billion a month they're doing at the moment in terms of purchases from the market. So mortgage securities and what's the other one? Treasury securities. But obviously at some stage that will end. So that's what people will be looking at, is when is kind of that easing, that loose monetary policy likely to end, in terms of them pumping liquidity into the market by buying assets, right? Short end of the yield curve assets. But we're going to talk about that in a second. But I think that's a big clue today, that is all the market cares about. Home sales are very, very weak, and therefore still went up. Market didn't care. I'm going to jump over these very quickly because I don't think they're going to be that in focus this week. Things like durable goods orders, consumer confidence index. Again, I don't think that's really going to be a big factor because it's just the day before the FOMC. This we're going to come into in a second. I think Wednesday this week is going to be a real big. I actually don't think it's going to be that big a deal because I don't think the Fed will give that much clues. It's still a lot of people talking about the end of the easing of monetary policy still a year away. Some people talking about October, I think, next year. So I still think it's very, very early, but obviously you just never know. And I believe the FOMC president has said that he's going to give ample warning to the market about any tapering, right? I was just trying to think of his name, Powell, right? Powell, I think it is Jerome Powell. He said many times, right, he's going to, I'll probably spell his name wrong, but he's going to give a lot of warning. Obviously, he doesn't want to shock the markets, right? You can imagine that wouldn't be very good. I think they're going to communicate that probably over the summer at some stage, towards the end of the summer. Maybe they'll give some clues as to, not obviously they're going to stop, but when it's likely to start easing off. And we're going to come back to that in a second before we just wrap up. Thursday will be very interesting. GDP, I believe it's, I can't remember the number, don't quote me on it, 19-20 trillion dollars, the sort of size of the economy, back to where it was at the last quarter of 2019, I believe. But yeah, very, very punchy numbers. Don't forget, obviously, the base is lower because obviously last year was so depressed, but solid numbers expected, so that would be quite interesting. I believe it's the first estimate of GDP for the last quarter, so obviously don't forget there's various releases as more data comes into the statistics department in the US, and they are able to put data together. They can revise it more and more as they get more of an accurate picture. Unemployment claims obviously will be quite interesting. Again, as I said, we had that spike last week, and then I think towards the end of the week, the market will be looking at the PCE index. Kind of, I think that's the Federal Reserve's preferred measure of inflation, which has been quite high. I think the headline CPI recently has been 5.5%, very, very high. Okay, and despite that, obviously the Fed has kept very loose monetary policy, which we're going to talk about in a second. So I think that's really where, kind of GDP on Thursday, obviously inflation numbers on Friday, Wednesday FOMC. So I kind of think that's where things will really start being interesting from Wednesday onwards from a fundamental perspective, which we're just going to wrap up now. Okay, so you can kind of see the kind of Fed really stepped up its buying in terms of how many, mortgage securities and treasury securities it holds on its balance sheet. Really shot up, right, in obviously last year, kind of COVID times, to support the economy, and it's just kind of been going up. I've written it down somewhere. I think it is, it's 80 billion. I mentioned it before. 80 billion a month of treasury securities and 40 billion of mortgage securities. So probably pair that first, taper that kind of stuff, mortgage-backed securities, right, and then move on to the plain vanilla treasury securities afterwards. But yeah, that'll be interesting to see this tapering, and I think really that's what the market's focused on. Inflation is interesting just because obviously, even though it's a headline number, right, it's not the core kind of CPI, and there's a lot of arguments about whether it's kind of an accurate picture, because I know it's got components, obviously volatile components in there, like gasoline and so on and so forth. It has been elevated. It'd be interesting to see if the inflation number does come down a little bit in the US, because that will take a little bit of pressure off the Fed to have to start to reduce this easing effect that it has. Because at the moment, the kind of message coming out of these guys has been that, it's temporary. They believe this is very temporary. Why? Because obviously during COVID, supply has been constrained, right? We've seen that in the housing market, which has caused what? An upward pressure on prices of goods and services. So guys, hopefully that's kind of giving you a scale of, or kind of summary of what the market's going to be looking at next week. Obviously heavy focus on FOMC statement and so on and so forth on Wednesday. Let's just quickly get on the charts for 2 seconds, because normally institutional Sundays will be on a Sunday. I've already traded today, so let me just show you what I quickly did and why I talked about the data release that came out today, which was, give me 1 second, it was the housing number, wasn't it? New home sales, that's it. Why new home sales was really disappointing, but the market still went up. So let's talk about that and then we can wrap it up. Okay everyone, so here you can see probably what you're more used to seeing right on my videos, which is, so this is the S&P 500, today's kind of trading. Let me just show you, you can see Friday's fills there where I bought the market just in the corner, and then here you can see today, interesting day today, and in fact, sorry, let's turn this, so that's my order fills there. Let me just also show you, so you can see it's my live account, 1,087 and 50 today, and in fact if I get 2 seconds I'll show you kind of my month to date, and you'll see I do average income goal of around $1,000 a day. But more importantly, this is what's important, and by the way that stuff is important, because if I'm going to talk to you for half an hour about the economy, right, you need to know I'm not just some dude off CNBC who ain't got a clue what he's doing. I'm actually putting money behind everything I say. Very important, right? Because not enough people do that. But look, let's get to the point. Point is, all-time highs again today, even though we had the negative numbers, which admittedly helped my position. I was getting short. I'm not going to get into it. I talked about this in the G7FX community. Okay, if you're not in the community, get into it. Okay, because this is the type of approach is taken to markets. Okay, serious stuff. Okay, and hopefully you can see that by today's video. Got no interest in bullshit. Okay, I'm talking serious stuff. Okay, I'm here to make money, not to, feed crap into people's minds, like what I see generally. So yeah, get in the community if you're not there. But the point is that I was selling the market today. I kind of gave the reasons already. Rotational market, I felt we were struggling at the highs coming into the RTH, sold the market. I know that I wasn't going to get much out of it, so I did take my profits. I then bought the market, didn't hold it, doesn't matter, I don't care. Okay, made money today, it's all that matters, money in the bank. But the point is, after the data was out of the way, right, which was around 10 a.m, we shot back up. So what's the market doing? It's shrugging its shoulders, literally, at the new home sales number. Do you remember the plus 676 versus the expectation of 800k? Very, very low number relative to where we've been. Like I said, since it's over a year, we haven't had a number this low. Market doesn't care. Okay, it's expecting probably very little out of the FOMC on Wednesday. It's expecting a continuation of the same rhetoric, probably no major changes. That's what they're betting on. More earnings, obviously, releases this week. The earnings from companies in the S&P 500. Let's not forget, we're trading the S&P 500, right? If the S&P 500 earnings are good, market's going to go up. So obviously very, very bullish from that front. Really nothing's changed. So no reason why it shouldn't go up, okay? If something changes Wednesday, obviously we'll see that, right? We don't know that yet. I'll talk about that in the next institutional Sunday. Volume 2, hopefully this weekend. Try not to keep it as long as this one. Just finally, okay, let me see if I can load it up. I did promise that I would show you my fills this month. So let me just get that across here. Okay, so this is my, again, if you follow my Instagram, you would have seen all of these fills. You probably saw the video I did earlier this month with my $4,000 day. Today, I'll put it in, you can see here, 1,087.50, okay, which you see here, 1,087.50, okay. 512 on Friday. If you follow me, you'll see all of these every single day. I post my fills pretty much on Instagram at NVForex. But yeah, just kind of wanted to go over, just very briefly, some stats. So this stuff isn't really that important. It's, let's have a look. So average winning day, not trade, because that's trade, day, 967. So you can see I'm typically aiming for an income goal of around $1,000 a day, which has its good and bad points, right? Today, I was up $1,000. I got in the long, as you see here, right? I got in the market long here. Must admit, I'm only human, okay? I had my $1,000, made a little mistake here, got out of it, started to get long and thought, you know what, I don't want to push it. And I probably was being influenced. That's why I'm showing you this stuff, because I want you to know I'm human as well, okay? As you saw, I was up 1,087, slightly less with commissions, maybe $30 or whatever I pay in commissions. But I was around my daily kind of income goal. And yeah, obviously I got influenced by that. But just some other stats this month, obviously very, very good, 88%. Win rate typically isn't that high. Average losing trade, $93. But I don't want to mislead anyone, okay? One thing I have been watching for is my MAE is $1,100 this month. It's a little bit higher. In fact, it's too high. It's higher than I would like. Relative to obviously other institutional traders and the market in general, it's fantastic. Right, let's be honest, 1-to-1. You know, I'm risking $1,000 to make $1,000. I take that every day of the week, but it should be lower. Okay, I want that to be lower because my average losing trade is only $93, and therefore there's a big mismatch between these two. Now, some of you might be getting lost saying, I don't know what on earth Envy's going on about, this MAE stat, or whatever. Don't worry, we're going to talk about that in a future video. Just wanted to kind of highlight some of the stats this month, and there's still a few days to go. There's a whole of this week. So hopefully I can push that towards 20K for the month, which would obviously be great. But yeah, listen, that's it. We're done. I hope you enjoyed Institutional Sunday. I do want to go back to the PowerPoint slide, but no, leave it. Let's just leave it as this. So hopefully you understand what I said at the start. Very, very different, right? Very different video to anything I've seen out there, right? You show me another person showing this stuff. This is what drives markets, okay? Not driving around in fancy cars or talking about, you know, don't get me wrong, motivation is good, okay? And I will do some videos, but come on, these guys are doing it every bloody video, right? Every frigging 1 or 2 videos is motivation, psychology, this, that. These are monkeys, okay? I couldn't care less, right? The Dalai Lama ain't a trader, okay? He's got the best psychology in the world. Who cares? Okay, if you don't know what you're doing and you don't know what's driving markets, the stuff I showed you today, the order flow, all of these things, then yes, obviously introduce a bit of psychology into it. I get that, it's important, but some of the stuff I see, and I'm sorry to go off on a rant, it just really pisses me off, right? And why shouldn't it? Because it's driving people that way when actually success is that way. Okay, so hopefully this stuff helps. Let me know what you think. Hopefully you liked it. Follow me on Instagram at MVForex. Watch out for the next Institutional Sunday. Love putting that together. Keep safe. Now we've come out of lockdown. Hopefully you're keeping safe, because you don't need to wear masks and you don't need to do that, but be careful, right? Still, have a great evening. Any questions, comments, let me know. Otherwise, see you on the other side. And sorry, one final thing. If you haven't watched the free training yet, watch it. G7FX freetraining.com. I'll put the link below. Have a wonderful evening. And don't forget about the £250 giveaway, right? I'm doing it on my Instagram. I'm giving away £250 cash to the best hashtag. Head over to my Instagram to check that out. At NVForex. I'll do the link later with the little animation. Have a great evening, guys. See you later.